Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. And today I want to talk about a particular aspect of investment real estate that sometimes is controversial. Do you buy on appreciation, or do you buy on cash flow, or do you buy on both? Now, back in the crazy days, back in 2005 and 2006, I used to go out to California about 6 times a year on the average and speaking to investment groups out there that would buy Oklahoma City real estate. And I would get up on a stage speaking to 300 or 400 investors and talking to them about my market and contrasting that market with Phoenix or Orlando or Denver or any number of markets. And I would say one thing that always got a rise out of the crowd and people would argue with me on, which is, well, something, I can pretty well tell you from a short-term basis with a degree of certainty what your cash flow is going to be on a home. But if I try to tell you what appreciation is going to be, I'm pulling a rabbit out of my hat. And because that is a very volatile figure. And because of that particular reason, I don't want to base an investment on appreciation. And so I used to get people just almost mad at me for that. Now, I'll tell you what, in 2014, they're not mad at me anymore. Because what they learned is that they were buying property in these markets that were going up 15, 20, 25% per year. They were having negative cash flow, having to put $500 more than the rental in order to pay for the mortgage, but saying, oh, no worries, it's just going to keep on going up. And, on paper, I'm looking really good. Well, the problem is that when you do have volatility in the real estate market, which we learned in 2007 and 2008, probably better than we've ever learned in a bad way, we find that negative cash flow and now all of a sudden negative equity is not a good thing to have. And something, those investors that believe me, that bought in Oklahoma City in 2005, 2006, 2007, guess what? Most all of those people, if they didn't go crazy in Florida or someplace else, they still had their properties. And the reason why they kept those properties is because they were not only having a renter on a low vacancy rate, so it was typically rented almost all the time, but the rent and the expenses with the rent were still greater than the mortgage payment, positive cash flow. So, give you an example. I showed a house today. The house could be bought at $94,500, which is a really low amount for the Edmond, Oklahoma market. That's about as low as you're going to get in something that's habitable. And, we looked at it. We said, well, $3,000 to $5,000 worth of work needs to be put into it. Not a tremendous equity position, maybe $5,000 or $10,000 after you put the money into it at this current time. But even on the low end, we knew that we could get $1,000 a month. And I did the estimate for them on this. And, the monthly payment was roughly about $600 a month, principal, interest, taxes, and insurance. And the $1,000 was the low end because we never want to over-promise and under-deliver because we thought we could get 11. But even with $1,000, with that type of investment, with 20% down, roughly, with closing costs having about $22,000 out of pocket, that person was getting about a 13, 14% cash-on-cash return in that first year. They were getting $400 of positive cash flow. And what they also asked me at the time is, well, what's the appreciation been in Edmond for the last 2 years? And I said, well, about 5% per year. But something, if you're going to hold that property for 7 years, and even though historically it's even 5 years, I'm not going to do that. I'm going to estimate 2.5% or 3%, roughly about, 40 to 50% less than what is typical. And the reason why is because I really can't predict what's going to happen 5 years down the road. I can't pretty well predict what's going to happen this year or next year in terms of rental rates. So if you're buying real estate and you want to buy safely and you're not into rolling the dice on Vegas and putting everything down on one number, then what I recommend that you do is go on the low side of risk, really emphasize positive cash flow, and realize that appreciation, it's a total bonus. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.